Morning, everybody. Thank you so much for joining us today. I'm Betsy Kenyon. I'm the marketing coordinator here at Elevate Wealth Advisory. If you're new to us, we are a wealth advising firm based in Athens, Georgia. We were founded 41 years ago in 1982 by Chuck Vickery as Vickery Financial Services, and he had the goal of helping clients make smart decisions with their money. Here we are 41 years later, still helping people make smart decisions with their money. But now we are a team of 10 people led by our president and CEO, Deanne Rosso. Today, we're so excited to talk about philanthropy, charitable giving in your portfolio, specifically focusing on donor advised funds. We've had a lot of clients ask us over the years about donor advised funds, what they are, how they work, and what benefits do they offer. So today, we're bringing you some experts. We have with us not only our own Dee Dee Bloom with Elevate Wealth Advisory. She's our advanced planning coordinator, and she's the one that is our liaison between donor advised funds and our firm. But we also have Bill Hewitt with TIFIN Give. So before I introduce everybody that's here, I'm going to tell you a little bit about some housekeeping items. If you look at the bottom of your screen, you'll see a Q&A box and a chat box. So throughout the presentation, if you have any questions for Dee Dee, for Bill, or for Kelly, just go ahead and put those in either of those places, and we'll wait until the end of the presentation to answer those questions. And then also, if we can't get to your question today for some reason, you can email it to me at marketing@elevate-wealth.com, and we will make sure we get your question answered. So now I would love to introduce you to Dee Dee Bloom, our advanced planning coordinator, and she's going to tell you a little bit about her role here at Elevate. Hi, Dee Dee.
Hi. Hello, everyone, and welcome. I'm Dee Dee Bloom, Advanced Planning Coordinator here at Elevate Wealth Advisory. At Elevate, as you all know, we are here to help you plan and invest for a comfortable retirement and leave a lasting legacy. Of course, a sound financial plan incorporates more than just an investment strategy. My role here at Elevate is to encourage and facilitate conversations with our other strategic partners to include things like insurance planning and long-term care, estate planning and tax planning. All of those pieces of the puzzle come together to complete the full picture of your financial plan. One of those pieces, and what we'll be discussing today, is charitable giving. Bill Hewitt is here with us today from TIFIN Give. Bill's career has been exclusively focused within the financial services industry, with the last 20 years engaged in delivering donor-advised fund programs for financial services firms, foundations, and wealth management companies. He spent the last 7 years at American Endowment Foundation, and most recently is now working with TIFIN Give. We asked Bill to join and share with us how TIFIN Give supports our clients who have donor-advised funds for their charitable giving initiatives, and how a donor-advised fund could be a tax-efficient solution for their gifts. So with all that said, Bill, you can take it away from here.
Thanks, Dee Dee. Great to be here. It's great to be with you all this morning. I appreciate the time and opportunity to chat with you. As they mentioned, donor-advised funds are not really new. They've been around for over 60, 70 years, I think, at this point within the financial services and within the community foundation space. But I think over the last decade, certainly the interest, the appeal, the growth of these has been really significant. So what I wanted to try to do today is initially kind of walk through, and I've got a few PowerPoint slides. I hate to take up the whole morning with it, but I do want to pop a couple slides up just to share a little bit of what these programs are like, how they work, what they can do to help provide. Let me get my screen set up here. Sorry about that. My share screen is not sharing. There we go. Give you a sense of what these do, how they operate. They're essentially very, very simple to use. And they're a program that have, again, been used by banks, been used by community foundations, by colleges, by universities. And it's something that ultimately they're very simplistic in their nature. If you think about them, and one of the keys to it is really they work just like a charitable savings account, if you will. Any individual, any family, any company can set these up, and we have corporations that open them up as clients. But you can open up an account, set up a deductibility program, and you receive an income tax deduction for anything that goes into these accounts. So if you put cash in, you get a tax deduction, just as if you were going to give $100 at the local food bank or $100 to the local church. You get a tax deduction for the amount that you put into the fund. You can also contribute appreciated assets as well. And we'll go into a little bit more of what types here in a minute, but you avoid capital gain on any of those appreciated assets that go in. So rather than paying taxes on those appreciated assets, whether it's stocks or bonds, real estate, You don't have to pay the tax on it. You get a deduction for the full value of the property. And all of that money goes into this account where you then have the ability to distribute those monies later to charities that you want to. You avoid appreciation also on the growth of these assets once they're in the account. And that, is another aspect of these where once the money is in, whether you put cash in a donor advised fund, whether you put appreciated stock, whether you put in appreciated real estate in it, and that liquidates, that cash is invested, you do have the ability at that point to watch that grow. And any growth on that, just as if it was in a 401k IRA, is tax avoided. You don't have any tax on that. You don't pay it when it comes out because those grants at that point are coming from a foundation. So it's a foundation grant to a charity, and there's no tax impact at all. So it's really a powerful tool for donors to use to be able to really maximize what you're doing with gifting already. And a lot of people today, you might be making, what we call checkbook philanthropy. You give checks out to organizations that you care about. Come holiday time, you're writing checks to a variety of groups. This really gives you a chance to magnify the ability of controlling that. Instead of having to keep track of all those checks at year end, you set up a donor advised fund, put a large block of money in it. It could be 10,000, 15,000, whatever you happen to have. And then at the end of the year, when you're making grants, or throughout the year when you're making grants, you don't have to track all those individual checks. You have that one-time deduction putting the money in, makes it very simple come tax time to monitor that. A little bit of the structure on these, they're pretty simple in how they're put together. They're owned and administered by a charity, a 501c3. Now with TIFIN, we handle all the administration, but the charity is an organization called Give. It's a foundation that's been around a number of years that handles all of the donor gift receipts. So if a donor puts money into the account, the gift receipts are issued by the foundation. That's what triggers the tax deduction. Again, just as if you were giving money to a 501c3 down the street, your community foundation, college, university, you get a tax deduction when you make that gift. When you put money into a donor advised fund, you get a tax deduction when you put that money into the donor advised fund. That's the trigger point because you're making a gift to a charity. At that point, though, the distinction is you now have this account set up and you have the ability as a donor, the family can get together and collaborate on grant making. If it's an organization, they can put a committee together to decide how those grants are going to be made. So it gives you the ability, once this account is set up and funded, over time, you can make grants to any organization, any charitable organization in the country that you choose. And fundamentally, at the end of the year, a lot of times people are talking to their tax preparer, their CPA. Maybe they had a big business sale throughout the year. Maybe they had a big asset come in and liquidate, and they've got a big tax hit coming. And the CPA says, wait a minute, you've got some issues here. You're going to have a huge tax bill this year. We need to do something to reduce that. And then the pressure is on, okay, who do I want to give money to? Because that's usually the first thing they'll think about is how do I make a grant? How do I give money? Who do I give money to be able to reduce that tax hit? And this really enables a couple or individuals to separate that decision about, okay, I've got to put X number of dollars into a charity to be able to get enough offset to avoid this huge tax bill. But I don't know who I want to give it to just yet. I don't know who I want to support. Do I give it to the community foundation? Do I go down to the Boys and Girls Club? Do I give it to my alma mater? So you set up the donor advised fund, you get that tax deduction, and then after the first of the year, you sit back, you think about it, sit down, talk to the family, decide where you want that money to go. So when we talk about separating the financial planning aspects or the tax planning aspects of gifting from the philanthropic decisions about where it's going to go, who you're going to help support, that's what a donor advised fund can do effectively, is it helps you buy that time to sit back, relax, wait for the dust to settle, and then think about who you want to give to. You can sit down, talk to the family, get them together and say, okay, who do we want to support this year? So it's a nice tool from that perspective. As far as what you can put into a donor advised fund, it's really almost wide open. Certainly cash is the easiest. That's what a lot of people use, but you really start to get the greatest power and impact in funding a donor advised fund when you're taking appreciated assets, things like appreciated stocks in your portfolio or maybe appreciated mutual funds. Some people include land. You can use developed, undeveloped land, real estate. So if you have a big parcel that used to be rental property, you're no longer interested in maintaining that, you don't want to keep that going, you can put rental property into a donor advised fund, and then it can be sold. Again, the key with any of this, whether it's things like real estate, developed land, undeveloped land, closely held businesses is another area we're seeing a huge uptick right now because of people that started businesses 20, 30, 40 years ago. They're at the point now where they're having offers on those businesses. They're getting ready to sell them. And, they don't really think at that point about, gee, I've got a buyer. I want to get this sold. Let's get the contracts signed and let it get it done. They don't really think about the tax impact initially when that comes up. Sometimes their financial planners will hear about it, they'll think about it, and they will be able to get to them early enough to recommend, hey, did you know we can take a part of that business today, make a gift of it, transfer part of that ownership of the business, part of the title of that real estate to a donor advised fund before the sale. And then once that property is sold, the DAF becomes a party to that sale. That interest is turned over to the buyer, and that money comes into a DAF in addition to the owner being able to keep a part of the cash themselves, whatever they choose to. But that calculation, the accountants can run. They can decide how much needs to be set aside. But the key there is get to that decision and get to that owner early before any contracts are signed, before letters of intent are signed. That's the point at which the IRS says, nope, everybody out of the pool. Too late. You've already made that decision. You can't donate it now. So you have to get those decisions made before the business is sold. But if people are thinking about selling a business, selling property, selling real estate, selling tangibles, we had people years ago at American Endowment Foundation that gave farm equipment, huge tractors, and those things are hundreds of thousands of dollars of value. And there's a pretty good market for those in some of the areas of the country. They were giving farm equipment. So there's a lot that can be gifted depending on how early you get to the folks and what the value is. You're not going to take, grandma's painting, but, there are certainly things that can be liquidated at auction, and there's certain things that have collectible value that can be given to a DAF. But it opens your mind up a little bit and has you thinking about what might be a gift and what can I take from just tangible property that I just want to unload and get rid of, don't want to handle it anymore, and put it into something where it can be really useful. Or be able to not only let it grow, let it get managed, but also have something that you can use later for philanthropy, either for yours or your family's philanthropy. And the other aspect of donor advised funds that's nice is these can go on really in perpetuity. It's not just one generation. It's just not my wife and I that set these up, and then once we're gone, that's the end of it. These can last for quite some time, and it can go on to the kids. They can take over as donor advisors after my wife and I are gone, or they can be a part of it while we're around. So these really do become a family platform for philanthropy. And it's an interesting conversation when people start to think about it, because I used to do, before COVID hit and I was able to travel around the country, I do presentations for huge groups of 100, 200, 500 people. And it was always fun to ask for people to raise their hands, say, how many people in the crowd here think of yourselves as a philanthropist? And you're seeing more and more people today that would raise their hands, and then you'll get a bigger portion of the crowd. Decades ago, you didn't get that many because they always thought it was, Warren Buffett and folks like that. But then you ask people, how many people here pay taxes every year? And that's pretty much unanimous, unless someone's playing games and they're not paying. But the fact is, if you're paying taxes today, you are a philanthropist. You're just electing to allow the IRS and the government decide where those monies are going to be used. And when you start talking about charitable gifting, one of the concepts is, do you want the IRS and the government to decide where that money is going to be used, or would you rather control that yourself and have a little bit of impact on the organizations you want to care about and you do care about? So what you're doing is really shifting a bucket of money that you aren't going to be able to keep anyway, and putting it in a bucket that you may not be able to keep it, but you can control where it's going to go and where you're going to distribute it. That's another aspect of donor advised funds, is once you make that gift, once you set these accounts up, you can't get it back. You can't say, oops, I made a mistake. I want to get my money back. It is in there. It's irrevocable. It's a gift to a foundation, just as if you gave it to Cornell or Syracuse or Ohio State or the local community foundation. You can't turn around and say, I want it back. But you do have the ability to control where it's going to be distributed. And in a normal donor advised fund, that can be any IRS qualified charity in the country. And not all, incidentally, not all universities and colleges are necessarily required to file with the IRS. So even though a college or university may not be a 501c3, virtually every college university in the country can be a recipient. So you can give to educational institutions, human services programs. As you see on this slide, religious organizations are one of the top in the country that always get grants, whether it's Jewish federations, Christian organizations, faith-based groups are a major component on gifting around the country. Arts and culture, healthcare organizations, people give a lot of money typically to hospitals and local food banks and things like that, scientific research. So again, the direction that grants can go is virtually unlimited. We can, through TIFIN, we can support international grants as well. which can sometimes be a little tricky, but we have organizations we work through that do a lot of vetting of international programs, boots on the ground overseas, where they can determine whether this organization is valid or not. And there are some critical aspects that have to be looked at, but we can support through TIFIN international grant making as well. The only big caveat is you can't get personal benefit from grants out of a donor advised fund. So if I set up a donor advised fund and I want to give $1,000, for example, to the local community foundation for the Christmas gala, I want to buy a table for 10 for my friends here in the community. We want to go down and join the party. You can't use things like a donor advised fund for a gala. I can't send money to Syracuse or Ohio State, $10,000, $20,000 and get tickets for the alumni game. That isn't allowed. Now, a lot of foundations, the idea is if they don't know about it, they don't care. If it's just a gift to Ohio State, that's fine. As long as the donor coordinated it with the booster club, they may be able to get away with it. But if it says this is for tickets for the Ohio State-Michigan game, or this is for a table for 10 at the upcoming gala, personal benefit out of a donor advised fund is a no-no, and they're going to shut that down typically. But it's pretty wide open. Let me stop there, see if the crowd has any questions. I've got a couple other quick slides, but then beyond that, we'll really keep it open for questions. But anything I can answer for you?
So far, so good. We don't have any questions just yet. So we'll wait till the end of the presentation and see what we get.
Sounds good. Let's talk just a little bit. I mentioned just a minute ago, everyone's a philanthropist. So the key there is, where are you getting started and when are you getting started? And what TIFIN has built is what we consider a next generation platform that really enables not just a single donor. If I go out and set up a donor advised fund with Fidelity, or I set up a donor advised fund with Vanguard, or some of these other big financial services players, or even a lot of the community foundations, it's really a one-person donor advised fund. Occasionally I can get my spouse in there, but it's rarely set up where I can have my family in this platform and coordinate and discuss what it is we want to do. And what we've built at TIFIN is something called TIFIN Give, and it provides a dashboard that really enables the family to come together, collaborate around their grant making, and decide what they want to do. And I'm taking a couple of screenshots of our platform just to give you a sense of what the power of this is and what it looks like. But the family can develop a mission statement. And again, nice time of year, everyone's getting together for Thanksgiving. Maybe we open up a donor advised fund and this David Miller family sits down and says, okay, what do we want to do with our money? We're going to be setting up a donor advised fund this year. What do we want to support over the course of 2024? Who do we want to give to? And they think about the causes and they think about who it is they want to focus their grant making on. And you can actually set up, aside from the husband and wife, you can set up portions of this account for the kids. So we've got Leslie, we've got Sarah, we've got Mark, and each of them can have a portion of this donor advised fund account that they're responsible for granting out. So they can each have an allocation. They can go in, make their own grants. They can review their programs, look at what they want to do. But it's unusual in the industry for the dashboards that have been developed over the years. And again, as I mentioned earlier, even though it makes me sound older than Methuselah, I've been around doing donor advised funds for 20 plus years, and I haven't seen more than one or two programs like this that have been developed to allow family engagement and support that type of collaboration. So it really is a powerful tool for families to get together, talk about what they want to do, who they want to give to, and decide where they want that money to go. And then beyond that, we start to look at, if I, as an individual within that family, want to support this, let's say it's a Cincinnati Museum Association, I can post that in the site for the family to look at. I can have them decide, okay, do I want to take a portion of my allotment here and give to that or not? And very soon, first of the year, this platform is going to enable individuals in the family to reach out to people that are not in the family that they know and solicit them or fundraise through them and say, hey, I'm supporting this organization. I'm doing this bike ride for MS. Did one of those a while ago, 150-mile ride to raise money for a friend. Hadn't ridden bikes in years and almost killed myself on that puppy, but it was a good fundraiser. We raised a lot of money, but I'd rather do it through a DAF. It's a whole lot less stressful. But again, it gives you the idea of how you can reach out, contact friends, family members, and be able to campaign, if you will, and raise money for initiatives that you really care about. Also have the ability within the platform, and this is something TIFIN does, again, based on organizations that you've listed or themes or missions that you want to support, we can do searches within a database of 1,500,000 charities. And based on those areas of interest, we can populate not only charities that they have been giving to, but also a range of other organizations that, based on their areas of interest, And our ability to do an AI-based data search of the database of 1,500,000 charities, populate this with organizations that fit those areas of interest. So it saves them going out to their organizations like GuideStar, where they can reach in and look for organizations that might work. We're saving them all that hunting and pecking and typing to find organizations that might be a fit for them, and make it a lot easier for them to search and find organizations to give to. Also, we show them where they've been giving so they can get a sense. I'm doing a lot with community and human services. I'm doing arts and culture, doing education. Maybe I want to shift and focus a little bit more in different areas next year. So we're trying to give them a nice snapshot of what they've done, who they've supported, what they're doing to support the whole philanthropic footprint of the family. And then ultimately, we give them a nice snapshot of what their funds are doing, where their money is, what the advisory fees are in the program that they might have. So again, a very concise dashboard, something that gives them a nice place to focus and for the family to get together. Instead of waiting once a year over Thanksgiving or Christmas dinner, you can connect and collaborate over the course of weeks or months and talk about what you want to do and where you want to give. So again, a very powerful tool, something that really gives people a reason to engage and talk about how do we better support some of these charities we care about and organizations that we care about. Let me stop there. We can certainly open it up for questions. I'll pop it back over to Kelly Amaro with TIFIN, who also is a direct support and liaison with the team here, and see if there's anything I missed or anything I need to fill in.
Hey, Kelly, thanks for being with us today.
Thank you. It's great to be here.
Anything you'd like to add?
I mean, I think Bill did a great job. I think he covered everything. Yeah, and just so everybody knows who I am, Bill is more like a business development for TIFIN Give, and then I'll be the one supporting the advisors and their clients that have donor advised funds. So if you happen to open up a donor advised fund, I'm here to help get you onboarded, help you find the charities that you like to give to, etc.
Very good. Well, we do have some questions, and I will let the three of you decide who should take each of these. We have a couple charities that are with us, actually, it looks like. And so they're curious, how do they get on your list of charities to donate to?
They will already be on the list if they're part of the IRS database and the charity database, because every one of those charities in the country that's filed with the IRS is going to be in that list that's sortable and searchable by the donors. So the key is just, as long as you're a part of that database, you're going to be reachable by these donors, and they'll be able to make a grant to you.
Oh, that's really cool.
Something to add there. So Bill had mentioned GuideStar. So that's where we pull all of our charity information. So if it's in GuideStar, you will see it on TIFIN Give. But some of those smaller churches, like the smaller local churches, won't be in GuideStar. But that's not a big deal. We have a process we use where we do the manual due diligence on those small local charities, and then we do add those to TIFIN Give. So if you don't see the charity that you want to give to, no problem. Send us the information. We'll do our due diligence, and then we'll add it to the platform.
Very good. Well, talk a little bit about the different options for contributing to a DAF.
Do you want me to take that, Bill, or you got it?
Oh, go ahead. You start off. Yep.
So as Bill mentioned, the easiest way is to do like a wire transfer of cash. You can, we do have an integration with Plaid, which allows you to connect your bank account. So if you want to set up like a recurring contribution from your bank account, you can do that. If you have an existing donor advised fund at another charitable giving platform, you can transfer that over. That's very simple. Basically, two-step process. You do essentially you make a grant to TIFIN Give or Give Clear Foundation, which is our 501c3 that supports TIFIN Give. You can contribute stocks, securities, as Bill mentioned, appreciated stock securities. We just launched complex gifting, which Bill mentioned. So if you do have a complex gift like real estate, etc., we support that as well. And I think that covers all of them, right, Bill?
Pretty much all of it. Yeah. Yep.
Okay.
That's a good segue to the next question we have. So can you invest what's the process of contributing things like real estate?
It's essentially working with us, coordinate through Kelly. We will work with you and determine what the value of the property is or estimated value today, determine how to best process a title transfer into the charity. And then once that property is going to be sold, and again, the key is going to be, is it already in the process of being sold? That isn't as critical, but we need to know roughly what the holding period is going to be. We don't want to have real estate that's just going to be sitting out there for a few years. So the plan should be to liquidate sometime in the near term. But then we do the title transfer, become an owner of that property, and then when it's sold, as that property is liquidated, as an owner, we'll receive cash from that sale, and then that money is going to go into the investment account that's going to be set up in advance of that. But it's a title transfer just as any other real estate sale would be. We just become a party to it. Give Clear Foundation becomes a party to that sale, and we would receive our portion of the cash when the real estate is sold.
Okay. Can you name a DAF as a beneficiary in your estate documents?
You can. The key is if you can establish that donor advised fund initially. So we have a name for the fund. We know what the account name is going to be. And then for the beneficiary documents, you're just going to indicate it's going to be as a beneficiary, Give Clear Foundation for the benefit of, and then the name of that donor advised fund that you've already established. So when you pass, whether it's IRA, whether it's a pension plan, whether it's real estate, whether it's a pool of assets, they could be a beneficiary, but it just has to be named as the foundation with the name of the donor advised fund below that.
Okay. Next question, can we invest the DAF assets or do they have to be held in cash?
That's obviously where Elevate comes into play. We like working with folks that are going to help that money grow. So once that cash comes into the account or once those assets are liquidated and become cash, then you're going to work with your financial advisor to determine what your horizon is for that money. And we have had it when I was at AEF, folks that were in their 70s and 80s that were very aggressive with their portfolio because they wanted to see if they can get a lot of growth on that, and their kids were going to inherit it. So they knew they had a very long window, even if they themselves may not have had that long a time frame. And we've had younger people that were very conservative because their goal was fund this donor advised fund, and I'm going to give it all away within 3 or 4 years. So they want to avoid any market volatility. They want to keep it as liquid as possible. So yes, you can invest it. Even though, again, one nuance, even though Give Clear is the owner of the assets and the foundation is ultimately the individual you're working with or the advisor is working with as the client, we always understand that it's the donor in this case that's going to have the vision for how these monies need to be used, how much risk they want to take on. So the donors are always able to work with the financial advisor and determine, what the best portfolio balance is going to be for those investments.
Excellent. What are the advantages of TIFIN Give over other DAF platforms? So do you want to take that one, Bill or Kelly?
I can start and then Kelly can fill in if we want. Yeah, I think one of the keys is, and obviously I said these things have been around 67 years. So you've got community foundations that have them. You have most alumni associations and universities and colleges have them. Jewish federations have them. Some Christian organizations have them. So there are a lot of variations out there. I think the key is look at the flexibility of the programs themselves. A lot of them have fairly high minimums before you can open accounts. TIFIN has no minimum at all to open an account up. Now, that doesn't make a lot of sense if you just want to set up a donor advised fund for $100, right? It's not really a big benefit to it. Where that comes into play, though, is with the increase in the standard deduction a few years ago, where they raised it to $25,000. A lot of people can't hit that in just their normal annual charitable gifting. So what a lot of people are trying to do was you'd put in maybe 50,000 if they have the cash available. You put in 50 or 75,000, you fund a donor advised fund so you get above that $25,000 threshold, and that funds your gifting for the next 4, 5, 6, 7 years. You draw that donor advised fund down, and then you add more to it later on. Well, the problem with some donor advised funds is they have a minimum of $25,000 or $10,000, so you can't really draw that donor advised fund down very low. So the TIFIN minimum being 0 gives donors the ability to work with their advisor, draw that account down once it's been funded, and then replenish it. So that's one example of one of the benefits with TIFIN. Another I talked about with the screenshots is the ability for a family to engage, work with each other, talk to each other about what they want to do. The other is grant flexibility. Some programs have limitations on who you can give to and what organizations are going to be eligible, whether it's faith-based or religious, other aspects of the DAF that they get more restrictive on. We don't do anything other than restrict it based on IRS qualification. So we'll give to any organization you choose to give to. Just some examples, but I think it's the flexibility of the people you're working with, what kind of support you're getting, and the ability with TIFIN, again, not to be locked into a chassis of funds. Some people don't like working with only Fidelity or only Vanguard or some of the commercial programs. And you have the ability here to work with your financial advisor, for them to work with you, use the same structure and the same management philosophy they're working with you on today. So it gives you that type of flexibility and working with people you know.
And just to add to that, kind of along the same lines of the minimum that you mentioned, we are seeing that our fees are lower to some of those other DAF platform providers out there. If that's a big deal to you. I mean, if you're going to be funding the DAF and then granting it out right away, that's probably not as important to you. But if you plan on holding a balance, those lower fees is definitely a big benefit of TIFIN Give. And then just the family aspect that Bill mentioned with his slides, like being able to include the family and make charitable giving like a family mission.
One other piece that I alluded to, I think, in one portion, but didn't dive too deeply in, some of the foundations out there that have donor advised funds are university based. And a lot of the universities do have them. One aspect of those programs to watch for, and some community foundations are the same way, is they're limited to one generation. So once you set up a donor advised fund, and you may be allowed to pass it to your kids, but they may not be allowed to pass it to their kids or let it go on in perpetuity. A lot of them limit that, or they limit the amount of grants that can go out of the university DAF. Penn State University, for example, has a donor advised fund program. Half the grants can go to the university. The other half are allowed to go outside. And some people may want a little more flexibility than that. They may not want to be restricted and have to give all that money to Penn State. They're more than likely to want to do it ultimately, but they don't want to be forced into it. So they're more likely to just give money to a Fidelity or someone and then give as much as they want to the university. So watch for the features, watch for the flexibility, any requirements that you're going to have to be abiding by as you move forward. And those are another piece of the evaluation process. Yeah.
Excellent. Those were all the questions we had. Dee Dee, would you like to talk a little bit about if our clients that are current clients want to get started with something like this, what the process would be? Or if someone's watching today and they're not currently an Elevate client, what would the process be to get started with us?
Yes, it's very simple. They can either reach out to me directly or they can reach out to their advisor, and I can connect them with TIFIN and give them the instructions on how to set that up and how to transfer the money. We can either do it in person, over the phone. It's a very simple process, so I can either just guide them through it or meet with them and walk them through it.
Wonderful. Well, thank you everyone for being with us today. We really appreciate it. We appreciate all that you do for our clients. And I just wanted to mention that I am going to send the recording to this webinar out to everybody so that you can review it. If anything further pops up and you have additional questions, just send them to me at marketing@elevate-wealth.com. And then feel free to share that video with your friends and family that might be interested in doing something like this. Thanksgiving is coming up. So if you're going to see your family, it might be a good time to discuss doing something like this. You can also see all of our past webinars on our YouTube channel. And if you just go to YouTube and look for Elevate Wealth Advisory in Athens, Georgia, you'll find us. You'll see this video will be up in about an hour. You'll see all our past videos. And then next month, we will have an advisor roundtable where all our advisors will be joining together for a year in review. So if you have questions that you think might be interesting to talk about over this past year, it's certainly been an interesting one, you can email those to me too at marketing@elevate-wealth.com. Thank you again, Bill, Kelly, and Dee Dee for being with us today.
Thank you.
Everyone have a wonderful day.